Welcome again to MegaTrade 101 video presentation of the foreign exchange market, basically concentrating on the euro pound from our previous presentation last February 23rd of last week. As we have indicated, basically from a low point of 0.8601, but basically the average support here, as you could see, would be at 0.8655 and currently working now at 0.9080 with a high of 91.49 for the week. The reason why it did pull back from its high, because the previous bar here, as you would see, pointed at the cursor with a high of 0.9153, and that's also the reason why the prices pulled back on a technical basis, that it had a double top formation. However, the strength and momentum at this time, that it has still been moving higher with the Williams percentage range at the levels of minus 13.94, but still the prices has enough room to move higher to the resistance price level trend line of 0.9275, which wasn't too far from the previous high established at 0.9149. Let's round it off to 0.9150, simply because it is a double top price and formation that made a pullback back to the working price of 0.9077, currently working right now. Based on our previous trade, we were looking at the resistance price level here at 0.8965, with it achieved rather, and working right now on the higher note, simply because the pound over here on this daily chart has made a low of 1.4770, and it's currently working at 1.4915. So the pound now is basically more bearish, and the reluctance of most of the investors and traders are not to take more shorts, simply because it had basically touched its initial support price level. This is a daily chart, but let's convert it into a weekly. So if you would look at it, it has touched. This is a trend line from the third Fibonacci method that we used to do with a Fibonacci fan and a trend line, that it had touched its 1.4770 price level, which is initially the support. Most of the reports made by Bloomberg News that the euro and the pound would basically be more on the negative tone, simply because of the crisis in Europe that is overweighing all possible recovery for the euro as well as the pound, and they're foreseeing the euro to go back to its price levels. Currently, it's working at 1.3555, and with a low of 134.33. If you would notice here that the trading range, this chart is on a daily basis, and it has a daily trading range of 150 pips up, 150 pips down, with a total basically of 300 pips average range, and it would be very difficult for retail traders to be making short trades, and they would basically be stopped out easily because of the wide fluctuations in the market. Be very cautious because the market in itself trades with a 300 pip trading average, and it would really be very difficult. Since we're trading the euro pound more than any other major pair currently, so the relationship of the euro pound as well as the individual sterling pound against the US dollar, and for a recovery for the pound to move higher would only be very temporary. And we're looking at 1.50, 50, 80 at the most, and would still have to go back lower. However, the 1.4770 is basically a good support price based on a technical basis, as well as for the euro at 134.20 is actually a good support level. However, we would not be encouraging at this point in time any particular long positions simply because the negative sentiments overweighs any technical outlook. The only consideration there would be that the euro pound still on a positive tone will have to try and reach its 0.9238 trend line resistance. Basically, if you look at it on a monthly basis, is still the trend line for a symmetrical triangle, which would indicate that it would only stop at this price level when it does. So just be careful to take that extra caution not to overdo, although a good long position for these price levels would still be in the making, but be very cautious about your trades because it does have inherent losses in trading the foreign exchange market. Good luck on your trades and have a good day.